Good afternoon. This is Mark Espy once again with MarketTamer.com, also known as the Robinhood Trader. And we're taking a look at the SPX. Before I begin the analysis here, I must remind everybody that this is for educational purposes only, not to be construed as a recommendation to buy or sell anything. To give ourselves historical perspective, we go back on the chart and we can see the symmetrical triangle that was put in here in late April was broken. We broke down out of that and then into this channel. And we were channeling for a bit down and up. We had the flash crash day, obviously, and down and up. And then we broke down into what is now a very sloppy looking bear flag. It's not very tight at all, but one would expect in a bear flag, that's a bearish continuation pattern for it to break and continue to break down. With that said, I feel pretty good about the support that was put in on the 5th of February, and that was at 1044, and I think it's pretty solid. Although Tuesday, this last Tuesday, we had a hammer that we put in as a classic hammer, and the low on that broke below the 1044 area. It didn't stay there, but it came back up. So I do feel this is a pretty solid area. We put in the next day an inverted hammer, then a very solid long up day, and then a trade down today. I feel that the area then between about 1050 and about 1100 and change is going to be the new channel area that we'll be looking at. I have a tendency to believe that this is going to hold down here, and if anything's going to break, it's going to be to the upside. The stochastics briefly broke down into the oversold area below the 20 band on the stochastics, crossed back over and came back up, and it looks like it's beginning to roll over a tad. It looks on the MACD like the MACD line wants to begin to cross over the signal line, but yet has not yet done that. In addition to that, it looks like the histogram is moving back toward the zero line, which is an indication that the bearish momentum has subsided to the downside, at least for the time being. Okay. One other point. We should make note of this, and this is also, forgot to mention this in the Dow analysis. This is the 200 moving average, and whenever you break down below a major moving average, it's fairly typical you're going to come back up and retest it, and that is exactly what it did. It held on the bottom side, and old support becomes new resistance. So it'll be interesting to see if in fact the 200 holds at this level as well. Okay, we're going to move over and take a look at the comp Q.